It's a tale of two families. Let's call them the Smiths and the Joneses. And what happened to them over the last decade with their TSPs? CD Financial, where health meets wealth. Well, the Smiths were presented a beautiful meal, but they decided to go a la carte. And they said, we're just going to select that one investment. And they took 1/3 of their TSP. Let's say it was 200,000 of the 600, and they selected it. And they said, that's okay, we're good with the rest. Now, year after year, they were reached out to. No response. What about the Joneses? The Joneses were presented a fine meal, exquisite dining, and guess what they said? Instead of saying, we'll just take that one dish, they said, please, let's begin. Would you please give us some wine pairing with our meal too? And the Joneses did quite well. Exquisitely dined, the Joneses did. And why? Because all along the way, the Joneses cooperated and they planned in conjunction with us for their entire TSP. They did what's called a written retirement income plan, which, I might add, included tax planning. And so all along the way, over the last decade, we were marching along doing what's called Roth conversions. Nobody gets paid any more money for it. It's something that is done because we know after a decade, you could come to a point where 2/3 maybe of your portfolio could be converted into tax-free Roth dollars. One time you paid the tax and done time. Never again. The end of 10 years, guess what happened with the Smiths? They reappeared. They came back and they said, we're being forced to take RMDs, required minimum distributions, and we don't want to take those. And guess what? You have to take them. But now they want to come and they want to have fine dining as well. And they said, forget about the a la carte. Please help us with the entire TSP and let's get this thing going. It's the Smiths and the Joneses. I would suggest in this case you keep up with the Joneses and you have somebody who plans for a full and robust retirement that absolutely includes a tax plan. We're not talking about an accountant, because accountants record history. They just record the snapshot of that year. And we're talking about planning for the rest of your financial future and the tax burden, because TSP traditional grows taxable, tax deferred, and so do regular IRAs. But if you got somebody that's really working for you, at the end of your decade, you're going to have a sunny disposition because the Joneses are all smiles. Year after year, the Joneses showed up and they cooperated with our plan that we were putting together for them. Year after year, with that cooperation and that trust, boy, oh boy, aren't they happy and all smiles? And that could be you too. Remember, you don't have to work longer. You just need a better plan. CD Financial, where health meets wealth.